What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. We do release videos every night throughout the week and one on the weekend, but we also release bonus content from time to time, so having that notification button hit on your end will give you the notifications when we do release that bonus material. Make sure you follow us on X at Bullish Chips, where we release real-time updates about our entries and exits on not only scalps and day trades, but mid and long-term trades as well. We also offer further commentary throughout the day on X about price action for SOXL and just other information about the market that might help traders throughout the day. Just a reminder, we are not financial advisors. We do not offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day, but in the past, as well as where we believe price action is going to go in the future based off our trading method and our charting method. So without further delay, let's get into the charts. That's what everybody's here for. Once we look at the day, how price action went today, we'll look at price action from the week perspective, take a quick look at it from the month. Again, nothing too much has changed, and then we'll dive into the triggers and targets for tomorrow, setting up our 4-hour triggers. If you're not familiar with the 4-hour triggers, make sure you check out our bonus content for how we set up our precision trading. The same goes for, if you are not familiar with our videos, the color coding system that we have for the different lines that we use, most often broadening formation lines. So again, if you're not familiar with that, go ahead and check out our precision trading video. This trading method that we use, the charting method, is based in the strat. So if you're not familiar with this, there's a free PDF. There's a link to a free PDF in the description of this video, as well as a link to Rob Smith's YouTube page, who is the inventor of the strat. He's got a bunch of videos out there. But if you stay with us through this video, I'm pretty sure you'll be able to pick it up pretty easily. There's only 3 things a candle can do, be a 1, a 2, or a 3. So that's an inside candle, a candle that either goes above or below the previous candle's high or low, and then an engulfing candle. So there's only 3 things a candle can do, and there's about 6 main reversals that provide you very precise entries and exits. So that's what we use as the base of our trading method and our charting method. Along with that comes broadening formations. Those are very easy to set up. Just basically giving a line from a high to a higher high and a low to a lower low, just to show where price action has been and where the highest percentage chance of it is to go in the future. So again, it's real easy to pick up, and by the end of the video, you should have a pretty good handle of it. But those resources are available in the description of this video. So let's dive into the charts. Let's look at price action for today. We're looking at the day chart right now. So, we've been talking about this monthly downtrend line, this green dash line, for quite some time now. We've been dealing with it for the greater part of, 5 weeks now. And it looks like we are, getting above it for real this time. So not only did we get above it, but we got above the year flip. So we flipped the year back green. If you look at the upper left-hand part of the chart, you have our time frame continuity indicators, and we can see that the day was green, the week was green, the month is green, the quarter's green, and now the year is green. We've been dealing with that as a major rejection point in the top of the range for the past 5 weeks, going in between this 24 and 28 range for about 5 weeks. We've been able to take advantage of that by buying puts at the top of the range and buying calls at the bottom of the range. We didn't buy puts today for a couple of reasons. We'll get into that in the video. There was a little bit of a different feeling at this point after the price action that we've had in the market over the past maybe 2 weeks. We had what many refer to as a look below and fail on the bottom of this range. So we've been bouncing off of the 24-25 range every time we get down to this bottom of this range for the past 5 weeks. At the end of last week, the week before last, on Friday, it finally broke below it and started to fill the gap that was down here. Bounced off of the top of that gap, really just barely wicked into it. And then we got a higher low on the day chart, pointing us back up into the range. So a lot of times people will call that a look below and fail. Of course, the target at that point again is the top of the range. So we did enter calls down here. We exited a lot of calls yesterday. We had a few more we exited today, but we've also still got some calls for September that we have in our stable, as well as January 26 and January 27. So the reason why we didn't buy puts today, we'll go ahead and let's look at it from the week perspective, because we did pull the 322 reversal, right? So let's make this a little bigger. So we had the 3 weeks ago and the 2 down. We were looking last week for the 2 up to get the 2 down, 2 up. It just took 2 weeks to get that 2 up. So this is what we call a combo 2 up. So we had the 2 down, combo 2 up. It broke the high of the 2, which is the entry point. Now the exit is the high of the 3, so there wasn't much magnitude there. But we were flipping back into full time frame continuity, so that kind of gives it a little bit extra momentum behind it. Even though we are still kind of close to this weekly broadening formation, we're not there yet, so it gives us room to push up. Now, will we do here what we did last week, or starting 2 weeks ago, at the end of 2 weeks ago, and then last week with the look above, below and fail? Do we pull off a look above and fail and come back down inside the range? That's a possibility, but let's go ahead and break it down to the month real quick. That puts us now with the higher low on the month, right? Started off the month pushing down for a 2 down. So last month was our 2 up, but it was a inverted hammer. It was still green, but it shows that price action tried to get up and was pushed back down. So we started out this month pushing down for a 2 down, which was then turned into a 3 today by going above the high of last month. So it's not only gone below, it's gone above now. So in the strat world, we call that a 3. Other people call this a bullish engulfing candle. It engulfs this candle. So, that's a bullish signal, because in the process of doing that, it sets, it's more of a soft higher low, because it's part of a 3, and we didn't get like a 2 down to close and then a 2 up to open up another month. So it's a little bit softer of a higher low, but at this point that is a higher low, and we've already made a higher high by going above the last month's candle. So we're already continuing the trend in the upward direction on the month. We go back to the week, or let's break out to the quarter real quick as well, just because that's kind of important as well. We're in force in this 2 down, 2 up, the magnitude being the high of the 2 to the left of the 2 down. So the high here is that 36. We've been talking about the 35, 36 range for weeks now, as a possible end target before any type of seasonality pullback in like October or September, October. So we'll see if we get there before the end of this month. But things are still bullish as far as things are concerned, from the quarter, the month, the week. Because on the week, this is a higher low as well right here. So we had the higher low here with this 3. This week went 2 up first and then went 3. So this started the this was a lower low than this low. So that's just a low in the trend cycle. This low being here above this one makes it a higher low. We've broken above that to lock that in as a higher low, and we've already gone on to make higher highs on the week perspective. So we're looking to try and take out this higher high here on the week. This is 32.64. If we can take that out, we can possibly use like this gap as a magnet. Not sure if we'll get all the way up to this weekly broadening formation, but we'll have broke free of this one handily, and possibly targeting this next higher high on the week, which is that 36.15. So that's kind of hopefully our ultimate goal before seasonality kicks in. Not sure if we'll get all the way there. We might only make it to this 32. We'll see, because that 32 puts us back kind of basically in contact with this weekly broadening formation. These purple lines are weekly broadening formations. So we'll have that to contend with, but we will be full time frame continuity to the upside. So maybe we do get the push up to this broadening formation next week. Maybe we get a push down and we see if we can use this year flip as support this time instead of rejection, because we had the rejection here, 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 here. So that's 4 different weeks. It was, I think, 5 different times on the day perspective, but 4 different weeks in a row it rejected us. So now we're breaking through. Let's see if we can now use that as support. Let's go ahead and break down the day. Let's go to the 5-minute first, and let's get our scalp chart up here. All right, so first things first, let's identify our quote-unquote 4-hour markers. So here's the trigger to the downside on the 4-hour. Here's the overnight low. Just to keep this in mind, it's not a 4-hour marker, but this is the top of the market maker's expected move for the week, 27.97. So, we are above that. We opened above it. We gapped up. We have the previous high a day and the trigger to the upside for the 4-hour right here at 28.08. And then we have the overnight high up here at 28.78. So we just look at how those get respected here. We got the gap up, and we got a further push up. We were able to use overnight high as support, and you could have either got in here maybe on the 1 minute or just based off of momentum of the open with the gap up, and you could have just kind of got in blind if you wanted to, using like the bottom of the gap as your stop. If you wanted to put that much risk on the board, if you wanted to wait, you could have waited for the higher low to get in on this 5-minute. You'd have been okay until you see this lower high getting put in, and you can put your stop here at the low of this 2 up, just so that as soon as it triggers, locking in this lower high, you could get out if you really wanted to avoid any risk, or you could have put your stop here just below this higher low here on the 5-minute, which coincides with the overnight high, right? So we can see one of our 4-hour markers coming into play very early in the morning. And then the gap was to, opened up here. So many times we talk about the half gap fill in reversal. A lot of people are familiar with the gap fill reversal, but we've noticed that, well, we're not the only ones, right? There's plenty of other people out there that notice this as well. We're not the only ones that notice this, but many times you'll see a half gap fill and reversal back up, even if it's temporary. The half gap or the 50% of a gap is a good point to look for a bounce. That's what we got here, and that's another one of the reasons why we didn't get into into puts. Let's go ahead and put our opening print out here. I must have deleted it. So this is our opening print, this peach line. That's just the first price to be traded in the day. So in general, our rules are calls above opening print, puts below opening print. Because price action was not only above opening print, but we got a higher low above overnight high, which is the next 4-hour marker that we have out there. We felt that this was more bullish than bearish. So even though we did get the lower high on the 5-minute, we knew there was plenty of room to put in a higher low on the 15-minute. So that could have come at any point. It didn't even have to put in a higher low on the 15-minute if it didn't want to. It could have just created maybe a double bottom on the 5-minute right at opening print or overnight high, and then took off again. So again, not in our strategy to take puts. If you did get puts up here, just thinking that this may have been a top, or just if you got them here going off of the lower high, then kudos to you. I hope you're able to get out down here somewhere, get you some good profit. But you can see it came back up, and we had the bounce off of opening print back and up to overnight high, where there was a fight, right? So a 4-hour marker being very much respected here. There was a fight over it basically the whole day till it finally got its footing, and with the higher low here, and took off. Now the higher low there was a bigger part of a higher low on the 1-hour time frame, right? So that was the higher low here, continuing the 1-hour uptrend. So you knew that you could get in here with the break of the high of this candle. So on this 2 up, when you get in on that 2 up, you have to still respect the fact that a 1, 2 up, 2 down reversal could kick in. So you definitely want to set your stop If you want to have a real tight stop, I would put it at the low of the 2 candle, because if it goes 1, 2 up, as soon as it goes 2 down, then your 1, 2 up, 2 down reversal is enforced. And of course, the magnitude for that is the low of the candle to the left of the 1. So that would have been back down here at the low a day, possibly triggering, the further gap fill, right? So you wanted to keep that in mind, have your stop set, but you were able to enter here with the higher low, and then just continue to ride it up, where we just got, we did get the 1, but then we got the 2 up, just showing continued momentum to the upside. We're talking about momentum. Let's take a look at the internals for QQQ in comparison to SOXL. So the upper left hand corner is SOXL. Then we have the tick Q here. We have the vol QD and the ADQD. Vol QD is basically money going in or coming out. If it's above the 0 line, money's coming in. If it's above the 400 million mark, then that's technically, what a lot of people consider the quote-unquote trend higher zone. So you should see price trending higher if vol QD is above the trend higher line. ADQD is just breadth, right? Like, are all the stocks in the stock market, or in this case the QQQ, are all the stocks in QQQ going up, or is it narrow, right? Is QQQ going up just because there are like the Mag 7 going up and nobody else is going up? That's what this will tell you, right? If it was just only the Mag 7, your breadth would be down, even if it was positive, it would be down towards the 0 line. All day today, it was up here in the trend higher zone. So again, more reason to not enter puts from my perspective, from how we trade here at Bullish Chips, right? So number 1, we were above opening print. Number 2, for the most part, we were above overnight high as well. Until we took that big dip, we were still above previous high a day. So we knew it was just a gap fill type of situation. And we still had previous high a day, 4-hour trigger to the upside, and the year flip below us, right down here as support. Even if the gap did fill, we probably would have bounced here, and we would have only got into puts if we did get a bounce here, but then got a lower high underneath opening print. Again, underneath opening print, we're looking at puts. Over opening print, we're looking at calls. If we would have got the lower high, especially on like the 15-minute, hour, something like that, underneath opening print, then we would have been in puts, right? A lot heavier. We did get a couple of puts today just as hedges when there was the downside action. Once we saw the price go below opening print, we were looking at possible gap fill, and then if momentum carried, there could have been, or even like a squeeze down, right? So we want to just protect our backside. Ended up not needing it. We got stopped out once it got back up here when it made a higher low and then a higher high on the 15-minute. So took a slight loss on those, but again, not a big deal. We made a little bit of profit off of the calls early in the morning, and then we're already in calls for the September monthly, as well as January 26th and January 27th. So no real skin off our back. I'd rather hedge there, especially after or when we're at the top of the range, right? If we go back here, price was up here, which is at our 28 level, 26 to 20, or sorry, 24 to 28 is the range that we've been in for weeks now. So there was always the chance of we're just at the top of the range, we're gonna come back down. So I'd rather hedge there. Ended up not needing it, so that's good. We'll still keep that in mind tomorrow, because we've made our higher high on the 1-hour perspective. There's still room to put in a higher low someplace tomorrow, but we'll take that in stride tomorrow. We'll get into our 4-hour triggers here. Our 4-hour markers and our triggers and targets here in a second. We'll just go back here to the 5 minutes. Yeah, so internals, when we look at that, the tick was basically above 0 line all day. So these were all bullish signals. And then you can see basically the price action reflected here in SOXL. Again, it's not a 1-for-1 because these internals are for QQQ, but there's something to keep an eye on because chips are heavyweight component of QQQ. So, if you're not familiar with these tick slash Q, VOLQD, and ADQD, you can look those up and make sure you do your research on those. They're the same as VOLD, ADD, and TIC for S&P 500, if anybody's familiar with those. So if not, do a little bit of research, look those up. But those the internals are a big part of how we monitor price action throughout the day, and are another tool in the chest of our tool chest of knowing when we want to enter and exit, and in what direction, right? So that's basically the price action for today, right? The 4-hour markers were respected, and we continue to move higher. So let's go ahead and put our 4-hour markers in place and get to our triggers and targets, because I know that's what everybody's here for. Let's pull up okay, we've got the 4-hour, and let's make this bigger. We'll take the 4-hour trigger to the upside and take it to the high of the second 4-hour candle of today. We'll take the previous high a day, we'll move it to today's high, which also happens to be the high of the second 4-hour candle of the day. We'll take our 4-hour trigger to the downside and put it on the low of the second 4-hour candle of today. You'll understand why more when we set our triggers and targets here in a second. And we'll take our previous low a day and move it up to today's low. All right, so we've got one other one that we'll just move just because we bring this up to get triggers. And actually, we'll keep that off for right now. Oops, let's go back here. There we go. All right, so let's set, we got our 4-hour markers set, right? So previous high a day and 4-hour trigger to the upside, previous low a day. I'm sorry, 4-hour trigger to the downside and previous low a day. Let's go ahead and bring up our after hours just to move our overnight high and overnight low for the time being. Again, they'll probably be higher and or lower in the morning when we get up, and we'll adjust them at that point. But just for the sake of setting up these charts, we'll go ahead and do it now. So we'll take our overnight high, set it on the overnight high, and actually this candle is the first overnight candle, so we'll put it up there, and we will take we'll remove the opening print because that was for today's opening print. We'll put out tomorrow's opening print once price action starts tomorrow. So we'll take the overnight low, move it up here to today's overnight low. All right, so we've got overnight high, overnight low. Get rid of that. Take the extended hours off. All right. Oops. Okay. So on a 4-hour perspective, what we're looking at tomorrow is for the downside. If we trigger to the downside, that would be a 2 up, 2 down. The trigger being the low of the second 4-hour candle of yesterday, and the target being the low of previous low of day, right? So the next candle to the left of this 2 up, if this goes 2 down, the low of that candle is the magnitude. So the trigger is 2878. Let's go ahead and get our notes out here. Oops, we need to set up Thursday's notes. Oops, Thursday. Tomorrow will be the 14th. Today is the 13th. Tomorrow there will be 94 trading days left in the year. We closed the day at 2927, and of course we have the week flip. The week flips red at 2603, so we're good. We're green. The month flips red at 2357. Once again, we're good. We are green on the month. The quarter flips red at 2438. Again, we're green on the month. And now we can finally change the year to flipping red at 2813, because we are finally above 2813. So we are in full time frame continuity to the upside, to the green side. Our expected move for the week, the market maker's expected move was $2.26, which topped us out at $27.97. But again, we're handily above that. So blown that out of the waters. That's, again, it's not uncommon. That can happen. I'm not going to say it happens all the time, but it happens, more often than I would say maybe 30 to 40% of the time. No, 30% of the time. That it'll go above or below, especially with SOXL. SOXL can really get going sometimes, and so it's not uncommon to see us above or below the market maker's expected move for the week. That's fine. It's just something to take note of. It's not something that we're buying puts at this level and calls at this level. You have to assess price action at that time. And for now, we're kind of on a tear. So the expected move was less than it should have been, right? They should have expected a bigger move, right? But at this point, we're past that. We know that we do have gaps above, still quite a ways away. We left a gap today, 28.31 to 28.08. And then we have further gaps to the downside. So we keep those in our notes just to keep those in mind as well. So that now we're on the 4 hour. We're going to mark our triggers and targets to the upside. To the downside. And again, we'll have a 2 up, 2 down. The trigger being the low of this 2 up being 28.78. 28.78 is our trigger. The magnitude is the low of the candle to the left of this 2 up. So that low is 28.31. Right? So not a whole lot of magnitude, but again, it doesn't take a whole lot in underlying price to move, the percentage needle on SOXL, right? $1.27 movement today was 4.5% movement, right? So, if you want to load up on contracts and, just take that scalp to that downside, I don't see any problem with it, especially if we're below opening print. Say we open somewhere around here, or even down, even if we gap down, if we do a gap and go or gap down and, we push down some and come back up and reject off of opening print. So we get that lower high underneath opening print and push down. Yeah, we can get puts, hopefully maybe closing that gap. So that's left alone. And then we also are hitting this year flip here, and we can use it as support as a bounce point, right? That would be pretty healthy, right? I wouldn't mind seeing that and possibly even just taking the puts there. So if it calls for it, I'll grab puts. First target being previous low a day. Second target being the gap close, knowing that a possible bounce off the year flip could be there as well. Maybe even leaving a sliver of gap out there, unfinished business that it maybe comes back and fills later on. But from just a strat perspective, very precise entry at this 28.78, very precise exit at 28.31. You could always exit, 90% of your position, leave 10% of them for runners. Leave 50% as runner. It's up to you. But this just lets you know you have a very defined target, trigger, and target, right? So let's go looking at the upside. We don't have a reversal like we do on the downside, right? It's a continuation. So this is a 2 up, 2 up. So we only have a defined trigger. We only have a defined trigger on a continuation pattern. We have to look to the left, or maybe at the weak strat or something else. We have to look at something else for an extended target, right? So let's make sure we've got 360 4-hour, and let's bring this in a little bit. I think we already have some out there, but we may have reached one of them. Let's go ahead and take a look, right? So our trigger is the high of today, which is the high of the second 4-hour candle of today, which is 29.33. All right, so actually, let's get our extended targets to the downside. I apologize, we didn't do that. So extended targets to the downside, right? The magnitude is previous low day, 28.31. We already have that. 28.78 entry, 28.31. The next target would be the gap close, which is 28.08. And just one more extended target, that 29.97 or 27.97. That's not far enough away. The low of this candle, I'm sorry. 27.7, so 27.70. Again, I don't really like to do too much extended targets on the 4-hour because most of the time the 4-hour just rolls into the day strats. So I don't even really put that second one on there. I'll leave the 28.08 just because that is a gap close. I'll just kind of make note of it. GC, right? So we'll leave that out there. Lower low on the 4-hour is here at 25.45, so we will mark that out. Right, we like to keep those in mind of where those are at. So let's get back to the upside. We'll have the 2 up, 2 up, triggering here. Triggering here at 29.33. So 29.33, and we'll have another 2 up, 2 up. So we have a defined trigger, but since it is not a reversal, we don't have a magnitude. We just have a target, right? Or extended target. So 29.33 is the first extended target. Is the trigger. Our first extended target And actually, I will bring out the, I did chart this out today. This was the fib extensions of the gap fill. Oops. Right, so if we break this down, if we look at it from like a 5-minute perspective, and we did, oh, come on now. From yesterday's closing print to today's opening print right here, we have this, and you can see how these Fibonacci extensions were respected, right? So we can probably look at those as some extended targets. 2962 would be a good first one. That would be getting up to this 261.8, and then 2985 would probably be my next one. So sometimes you got to pull some other tricks out of the bag. Oops, oh man, what did I just do? Okay, there we go. We reached that, so the next higher high would be 2850 and 3196. So we already have those mapped out. But again, sometimes you've got to pull some other tricks out to possibly see where price might go. We do have the 3055. I'll put that on there as well. If you're not familiar with the this channel, this 3055 is the 38.2 fib of the 2020 low to 2021 high. Let's just go ahead and bring out. Right, so if we look at this from this perspective, oh man, it's been a while since 2020 now. So if we look at the 2020 low to the 2021 high, or basically all-time high for SOXL, we have our Fibonacci here, our Fibonacci sequence here. This is the 61.8, the 3055. I don't know why I said 38.2. It's the 61.8 here. And you can see how it's been, some support here, resistance here, a little bit of support here, maybe 1 week of resistance, support, resistance. So it is a major level. So we like to keep that in mind. The 3055, we're at 2957. So, we're getting close. We could definitely hit that. And then, who knows? We pop through it if we've got a lot of momentum, but it is a big. I'm probably not the only one looking at that level. Like, okay, we could have a reversal here. That's a lot of overhead supply right here, right? So, if anybody that has bought last year at these highs, they're still underwater, right? And so you never know. For the folks who bought early in the year, or bought this dip in April, thinking that they were buying the dip, which they pretty much did until the next dip. If somebody else bought in this dip, or around this dip after it confirmed that it was a bounce, anybody that's bought up here and higher, they're still underwater. So anybody that did buy down here, they may be trying to get out at even. So if there's a lot of volume here, especially in this zone right here, you can see we had a lot more chop here. If these people right here that are in get out once we get to this 3055 level, we could see a lot of downward pressure. So we want to just keep that in mind. Let's go ahead and get back to our, let's go now to our day, since we have our 4-hour triggers and targets out there. Let's go look at the day. And again, on the day, we would have a 2 up, 2 down, including a gap fill. So again, that's kind of a magnet for price action. Sometimes gaps like to get filled. So we would have a 2 up, 2 down on the day to the downside. All right, and that triggers at the low of today, which is 28.31, which is also the magnitude of the 4-hour flip to the downside. So 28.31, we will have a magnitude because the 2 up, 2 down is a reversal. The magnitude for this would be the low of this candle, right? So there's the 2 up, and once you trigger 2 down, it's the magnitude of the low of the candle to the left of that 2 up. So the low here is 25.68, right? So we're going to take 25.68. Now, we may want to just put some targets in here, just keeping in mind, right? We're in an uptrend on the day, on the week, on the month, The quarter, not quite yet because we've only had one higher low, but I mean, that's the start of an uptrend. So all we need is a higher high or just another higher low. And so, you're fighting that at this point, right? So you've got the year flip below you. You've got last month's, let's bring up, we've got last month's high right here. You got last week's high right here. You have the year flip right here. Okay. So you've got a lot of support underneath you. Even if you go two down, who's to say we don't, just push down and then, push back up and then end up maybe like a hammer. Again, that would be a healthy pullback as well because that gives us a higher low on the day, on the 4 hour. So it keeps the uptrend in, trending up. If tomorrow we do get the two down, that's at, maybe a hammer. Maybe it doesn't even hammer, but we just get a two down. And then Friday, if we get a two up, that keeps that daily uptrend going. So you don't want to fight that right now, really. You want to kind of respect that. And so I think that there should be, some triggers, some targets on the way down to the magnitude because the magnitude is so large. Let me see if there's really anything. So yeah, this is kind of the midpoint right here, 27. You can see how there's, it's a level that there's, we're either stopping at or on the from the upside or the downside here in the chop, right? This 27 area. So 27 flat is probably a good target. Oops, I got the wrong. Let's go here to this chart. Yeah, so we got previous low day. Gap close could really be like your first target because, like last week's high is right here as well with the year flip. So maybe gap close is our first target, 2808. So let's move these targets in front of the magnitude just to let us know that, we're fighting through some uptrend and we might not make it to the magnitude, right? So 20, why does that say 2412? That's 2808. Oh, I put that here on accident. So this is 2808, right? That's our first target on the way down. And then we can have a second target on the way down of 27. Remember, we were looking at that 27 level. So 27 flat. That's probably good. I think there was a 26. We'll use 26. No, that's basically the bottom there. Yeah, we'll just leave those as our two targets on the way down. If we get past 27, there's probably a good chance we get to 2568. So we don't need any extended targets past the magnitude. I don't think that would kind of be a little overkill. So let's go to our target triggers and targets to the upside. Again, we'll have a two up, triggering here at 2933. Oops. All right, and then we have our targets to the upside. We'll start with these two. 3055. And really, we'll probably, let's see, 2033. Let's bring out those fib extensions again real quick and just see what that leaves us with. No, that doesn't give us 2955. Let's go ahead and let's break out. Oops. I don't know if I can bring the chart. Let's break out a fib extension tool here. And let's kind of look at I guess we've had a bigger pullback here than really realized. But sometimes I like to bring this out just because we've had kind of like this is kind of like a bull flag, right? So we can bring out our fib extension and just start from here. We'll go to here, this high, and then we'll come to this pullback, right? And that gives us some extended targets to look at. So the 3073 kind of lines up with that 3055, which is the 61.8 of fib of the 2020 low to 2021 high. 32, I guess that's still kind of an extended target. So let's remove that. Let's just take a look at this fib from here to here, from this high to low. So we got our 3055. So maybe that 150 fib there, that 3147, that kind of lines up with where we would hit the weekly broadening formation. So yeah, I'm comfortable with 31.47 as of the next extended target. Again, not sure if we get there, but it's good to have these out there just in case we need them. All right, so we got that higher high there. The next one is 32.64, which is this right here, right? Yep, 32.64. We'll just map out the next higher high there. Then that would be here, soft higher, a soft high, 34.94. No, that's a lower high. So let's get this one. This is 36.15. I believe that's on the weeks. Yeah, 36.15 is the higher high on the week as well. So these two higher highs on the day are the same for the week. Again, we're in an uptrend. We're in this 2-1-2 up. We've already reached magnitude. So I like to cross this out just to show we did hit it, right? And now we're on to our extended targets. So 30.55, 32.64. From the day perspective, we could hit that 31.47 in there as well. So we've got very precise triggers and targets. We could go through. Oh, we did go 28.50. So we went 3. Oh yeah, we went 3 on the month. So we'll take that. That stays remain underlined just to show it triggered first, and then we are in force on the 2 down green 3 on the month. So we're back in force in the 2 down 2 up on the month as well. But we've got a ways to go before we pull a green 3 on the year, right? So everything is in force to the upside. This 2 down 2 up, this green 3, right? We've got an engulfing candle on the month, and then we've reached magnitude on the 2-1-2 strat on the week. So we're just still trying to continue to float higher, looking for higher lows, especially on like the 1 hour, to get involved in on intraday. Looking for a higher low on like the 4 hour or day to get in on more of a swing perspective. Otherwise, we're kind of buying at the highs. If you're looking to swing right now, we don't have any pullback that we've had other than the one that we had. What was this back on? Yeah, the 6th. So I guess a week ago today. So, if you didn't get in here with something to swing, you can get in. Just know you've got to look probably on a lower time frame to set yourself a stop somewhere, a decent stop. Otherwise, you've got to set your stop all the way down here. We're truly gonna respect the rules that we trade by, right? So those rules are what brings us the consistency, right? And not breaking those rules, or if you are gonna break those rules, having something in place, knowing you're breaking that rule to allow you to not or to avoid a large loss, right? Like that's just the key of the game right now. Like we're not gonna bat 1,000%. That's just not a lot of people do that. Now we'll bat a high percentage. We'll bet 70% and 60 to 70% without batting an eye, right? Like that's what we do. But it's because we follow this method, because we follow the rules. We don't violate them, and if we do, we know that going into them, and we again set those safety nets so that we're not getting, taking these big losses, right? We only take big winners. We only take small losers. So we have everything set for tomorrow. We're getting into the second half of the week. Continue to be vigilant, looking for any downside pullbacks, right? Let's remove this, right? We did get this higher high after a higher low here. We've broken out of this zone that we've been in for 5-6 weeks almost now, right? Just make sure we're not going to get the reverse of what we got to the downside. We got the look below and fail. Make sure we're not going to get the look above and fail. If we do pull back, look for support here. It doesn't mean we're going to bounce exactly off this year flip. It's just we're looking for support there. So we're looking for the higher low on the 4 hour, on the day, on the 1 hour, whatever we need to find, see that as support, so that we can enter back to the upside and setting our stops just below that higher low, to avoid taking any type of big loss. So for weeks I've been saying I wish I could tell you to go long. I feel like we're getting closer to me saying, well, I'm not telling you to go long, but telling you we're going to go long. But I'm feeling like we're going to be able to, make a decision on buying, more swings here soon. I want to see a higher low here on the day, a 4 hour at least, and then we'll get some more swings. Still keeping in mind seasonality. September, October aren't the greatest months for tech, so definitely getting enough time expiration on your contracts, and we'll be at the money if not in the money. So we can take the profit when it shows we need to go ahead and take it. And if we get a bigger pullback here in September, October, all the more welcome to it. We can sell calls, we can buy puts, and then we can wait for the bottom to get set in and wait for the confirmation of the reversal back to the upside. And if we want, we can buy shares there, but at the very least, we can buy calls, mid and long term swing calls at that point. So we're getting closer, but we still got to keep in mind what's at hand. We could get this look above and fail and just go back into a range. That's not a bad thing either, right? If we do the look above and fail, then we just go back to what we were doing in the previous weeks, right? We're buying puts up here, we're riding them to the bottom here, we're waiting for a confirmation reversal here, and we're buying calls back to the upside. It's been working, we've been profiting. There's no reason to try and get fancy and do something else with it, right? We'll just take it as it comes though. So don't want to get ahead of ourselves. We don't want to make predictions. That's not what we do. We just take price action as it comes, and we make profit. So I hope everybody enjoyed today's video. Leave a comment in the video if there's anything that you want me to go deeper into, or if you're not clear on. Let me know in the comments if you're seeing something in the charts that I'm not seeing. I would never want to get blindsided by something just because I didn't see it. I'm always open to other people's ideas and opinions. So let me know in the comments if you're seeing something else in the charts that I'm not. Leave any other comments out there that you want to. But the like button really helps spread the word about not only the channel, but more what the channel is focused on is spreading the news about SOXL, which again is a high delta to low theta, low premium with a high beta underlying ETF. So all of those are recipes for very low entry cost of entry to good chances of big profits, right? So I just want to spread the word about SOXL and how you can take advantage of it, but also kind of spread the word about the trading method that I have been using, over and over. It's a repeatable strategy for a long time now to produce consistent results, consistent profit, and a steady stream of income. So again, this method can be applied to any other stock or ETF. It's not just for SOXL. I just happen to have this channel for SOXL because of, again, the low cost of entry to the high probabilities of getting good profits. So if played correctly, that is. So I just want to spread the word, so the like button goes a long way. Go ahead and hit the like button if you've made it this far. I truly appreciate it. Go ahead and subscribe if you haven't, and check out our other videos. But I hope everybody has a good rest of their night. Get some good rest, and wake up tomorrow refreshed, and let's get ready for another day of trading.